What's up, everybody, and welcome back to another episode of Twiddling Our Thumbs While We Pray for the Market to Collapse. I'm Jake Fletcher here with the Fletcher Group at eXp Realty in Miami, Florida. If you need an expert realtor in the area, all my contact info is in the description down below. But today, we are talking about some very important information if you're in the Miami-Dade area and you're looking to do a real estate transaction, whether it's buy, sell, invest, pitch a tent, just kidding. But we're looking at closed number of sales, we're looking at inventory, we're looking at median sale price, we're looking at days on market, we're looking at every single thing that you're gonna wanna know if you're gonna make the most informed decision in real estate, really, honestly. So, if you don't wanna make a good decision, then click out of this video. But if you like making good decisions, let me tell you, this is the video for you guys. So let's not even hesitate a single second longer. All right, so first thing we're gonna do here, we're gonna jump into some data. So first graph chart that we have here for you guys is median sale price versus number of sales. Now this is Miami-Dade County, like I mentioned, all property types, so single family homes, condos, townhomes, etc., no tents. And it's actually going from January 2019 until the end of September, because the September data is in, and because I'm a realtor and I have access to the MLS, I get the data straight from the source. And then I like to start from January 2019 for anyone who's ever wondering, because that way you kind of get almost like a full year before the pandemic, so you get to see that pre-pandemic market, the pandemic market, and then if you want to call what we're in now a post-pandemic market, maybe it's the monkeypox market. I don't know. That's up for you to decide. But we're looking at sale price, median sale price, right? And number of sales. So what does this tell us? What do we see here in this graph? So first thing that we notice here, median sales price, been doing pretty good, If that was the horse you were betting on, doing pretty good. Had a little bit of a dip there, right after interest rates took this crazy spike earlier this year, right around April-ish. I'm going to show you guys that in a second here. But we see that price had an immediate downward response to that. And around the same, well, really before, number of sales actually also dipped a lot. We're going to talk about that separately as well. We were really hopeful that this trend was going to continue, this downward median sale price. We were hoping that sale price pressure would continue pushing downwards because of high interest rates. But in the month of September, that's not what we got. We got a slight little bump up. Now, that's just 1 month, okay? 1 month of data is not statistically significant when you're looking at the grand scheme of time and space. So, it's possible that this little line, this little bump up, I didn't mean to put the words line and bump in the same sentence, okay? Get your mind out of the gutter. Now, it's possible that this line could actually end up going in the other direction in October. So we could see median sales prices going down, hopefully, maybe, cross our fingers, hope to die, stick a needle in my eye. And what we see here in sales, now keep in mind, sales are what we call a lagging indicator, meaning that these sales right here that happened in September, they were going under contract in either October or potentially even in July, okay? So what's happening here is not a representation of what's actually going on in the market at that point in time. It's a representation of what was going on in the market 30 days before, okay? So I expect to see this number of sales, this line, I expect to see that continue going downwards, okay? And again, we're going to talk about that. We're almost, not almost, but we're getting pretty close to this number of sales that was like the peak fear of the pandemic, when people weren't even going out to look at houses, even though they were living under a bridge and needed a place to stay. I'm being facetious, but we're getting low, man, in terms of number of sales. So that's concerning. But yeah, median sales price, hopefully we see that keep going down. not keep going, but start to go back down again. So next up, I wanted to show you guys the active number of listings versus the number of sales volume. I don't normally show you guys sales volume, but I thought this was really interesting. So what we see here, active number of listings, it's no surprise, inventory is tight, supply is low, and we see that trend represented in this line here. We saw a slight little bump up when number of sales went through the floor, right? Again, this chart over here, you see how number of sales went boom, right? Since about, let's see, January, February, March, it was just almost a straight downward, right? Now over here in active number of listings, right after that March, we see sales volume tanked, right? In concert with the number of sales, right? Because if there's going to be tremendously less sales, then probably also your sales volume is going down, right? But what we see around that same time is that, again, number of listings went boom. It had a nice little pop-up there, okay? And notice that was the number of listings going up was a little bit after that sales volume started to tank, right? So it takes a little bit of time for these things to kind of pan out. So you want to kind of keep that in mind. Just because you see one metric doesn't mean that, that that's the way it's going to be, right? Things can change. So what we also notice here with sales volume is pre-pandemic, we were kind of around this billion to, 1.25 billion, 1.5 billion, like right around there, getting up into that zone. And then it was like the pandemic hit, and it was like all of a sudden, it was like the real pandemic was everybody was like, possessed by the desire to buy real estate all of a sudden. Now, granted, rates were super low, and the Fed, of course, had low interest rates maintaining to help support our economy because we were going through a pandemic, But everybody had the same idea at the same time, and all this volume happened in the market right around that time. And then what do we see here? Boom. Right around the time that, really we saw interest rates take a big jump up kind of in November of 2021, and then boom, we saw a big dip, and people were like, hold up, things could get worse, we're going to go buy some more real estate, and then rates went crazy through the roof at that point, and then that's when we see this drop through the floor, where it was just like, no, I'm going to show you guys here on this chart coming up, but it was basically like, no, these rates are too high. So next up, we have number of new listings versus months of inventory. Months of inventory, of course, is if nothing new was listed, how long would it take to sell the existing supply? All right. So number of new listings in the green line, what we see here is, they're kind of bouncing back and forth, but the trend as of lately has been less new listings, right? So keep in mind, this is not active number of listings. It's not total supply. This is the supply of new listings coming on the market, right? So in September, that was less than in August. In August, it was a little less than July. July was tremendously less than June, right? Which was a little bit more than the past, kind of 6 months before that. So that's interesting to see. We're almost kind of down to where we were at in terms of new listings in November of 2021. It's kind of interesting to see. Almost looks like there's a pattern here. I know there's seasonality as well, so we got to account for that to some extent. But look, we're not even in November yet. We're in October, and this is September. So by October, maybe we're down like here in number of new listings, right? Because keep in mind, with high interest rates, we're at 20-year highs for interest rates right now. We're over 7% for 30-year conventional mortgages. So anyone who bought a house in the last 20 years, it's kind of like a big decision to make if you want to buy something new, because most sellers are buyers, and have a higher interest rate than what you already have. Unless you're downsizing and you're okay with, paying a similar amount for less house, most people are going to look at that as kind of a losing scenario. Now, months of inventory, we start to see and it's going up, right? So this is actually a good sign. We're getting close to that 6-month mark, which 1 to 6 months is considered a seller's market because things are moving really fast. 6 to 12 months is considered a normal market. Anything over 12 months of inventory is considered a buyer's market, meaning buyers have the advantage because things are sitting for so long. Sellers have to take less for their properties a lot of times. Now, it's not like some magical fairy is going to descend from the heavens and like grace us with their wand once we hit the 6-month mark. It's not how it works, but we're getting close to that 6-month mark, which means that, it's a definitive sign that the market is, in a sense, normalizing in terms of supply and demand. Now, whether it's a healthy normalization is, yet to be seen and is up for discussion, but we see supply and demand starting to come back into balance. And I'm going to show you guys an even better representation of that. Here's that same chart, but 10 years of the same chart instead of just the last 4 years or so. And you can see how big of a disparity that is in months of inventory compared to what the market is sort of used to, right? Over the last 10 years, from January 2012 right here, right up until the pandemic happened, we always basically had a little bit less months of inventory than the number of new listings in general, right? So there was a healthy supply of new listings coming in, right? Now, what's happened is that sales have gone so low that even though, yes, we have less new listings, but overall, what's been the most drastic change is the decrease in sales. And that's why our months of inventory is looking like it's going down into the Ninja Turtles layer. It's in the gutter over here. It's in the sewer, the sub-sewer, like Futurama when they had the sewer under the sewer. That's where this is going, right? So, it's crazy. We'll see what happens with months of inventory, but a little bit concerning. So this is the graph I want to show you guys with mortgage rates. Don't pay attention to this. That's just the screenshot for some reason stopped it there. But 30-year fixed rate conventional mortgage. This is since 2018, right? So a little bit before, almost roughly about the same time that I've been showing you on the graphs here. January of 2019 is right there. But you can see that in that last, period of time, what you see here since January 2019, September 2018, in that last sort of, for almost 5-year period, what we're seeing is a crazy uptick in interest rates, right? Now, keep in mind, here you got that big uptick in the last uptick in interest rates happened in July, right? And then you see the initial uptick that happened in January, right? So remember how we saw in this other graph over here, where did it go? What we saw here in terms of sales volume, we saw it go crazy down 2 months after rates went up, right? So remember how we said sales is a lagging indicator? Where was our other sales? Was the first one. Number of sales in the blue line, right? Boom. That was a couple months after interest rates took their initial run up right here. Boom, right? So that's perfect indicator of how sales are a lagging indicator. So we had that big run up. People were like, oh, okay, right on, but we've had 5% rates not too long ago, or 5% a little bit before this, right? And then that was when kind of things sort of bounce back a little bit in terms of the number of sales. And then once this happened, sales really, really went through the ground. So, we'll see what happens. But last but not least here, what I want to show you guys is close price to original price ratio and median days on market. So close price to original is the green line, blue line's median days on market. So what we're seeing here is boom. Right here in that last little period of time, like I was saying, when people were like, oh, okay, whatever, rates aren't too bad. Let's try to buy something real quick. And, sellers were kind of taking advantage of that, rush to the exit in a sense. And then the bottom fell out of the air balloon and we fell back down to the earth. Boom. And now you can get a discount, right? So 97% closed price to original price ratio. Again, anyone who doesn't know, that just basically means the ratio of, how much it closed for versus how much it was listed for. So if it was listed for $100,000, it sold for $97,000. That's a 97% closed price to original price ratio, which is where we're at on average here in the market. So very interesting deals have entered the chat. Now blue line here, days on market, boom, we see go, just down even as prices were getting higher, supply was getting less, volume was decreasing. days on market were still decreasing, which is just crazy to think about. But, we see this pop up here again. Our months of inventory has gone up. Median days on market has gone up. So, that's a sign that, like I said, the market's potentially starting to normalize, right? And that's what we want to see, okay? So if I'm a buyer right now, what does this mean? What does this mean if I'm a seller right now? What does this mean if I'm an investor, okay? So if I'm a buyer right now, honestly, I'm waiting because rates are insane. I'm getting my nest egg ready. I'm making sure my credit is good. I'm talking to my lender. I'm talking to my real estate agent. I'm getting everything ready, getting all my ducks in a row, okay? And I'm making sure that once, things are once it's go time, once, after you've smashed the like button, hit subscribe, and rung the notification bell, and that way you don't miss videos like this in the future when I notify you that, hey, this feels like the bottom of the market. Once you hear me say that on a video and you go start shopping for real estate in the Miami-Dade area, you want to have all those little duckies in a row so that you can go ahead and, pull the trigger figuratively on some real estate. So that's what I'm doing if I'm a buyer. If I'm a seller, man, first of all, I'm going to avoid FOMO, reverse FOMO of how I might have missed out on getting the peak of the market. Because most likely, you're probably not going to be getting the peak prices that you were seeing months, in the past, recent months. Like your neighbor down the street sold his house for X, 6 months ago. I'm sorry, but your house, if it's exactly the same, is not going to be getting that price, okay? So, first of all, I'm letting that go. Second of all, if I'm a seller, I'm making sure my house is, the best marketing possible. I'm working with the best agent, somebody like myself who's going to do, exemplary professional marketing of your home, put it in the best light, market it, in the best way possible so that in that first couple weeks that it's on the market where it's getting the most exposure, you can really strike the iron while it's hot. There's so much more I can say about that. If you have questions, then, all my contact info is down below. I'd love to speak to you about potentially listing your home. But if I'm a seller, I'm realizing as well that the market has changed, okay? So I need to have different expectations than if I was, thinking about selling 6 months ago, a year ago, etc., right? So realize that the market has changed. You're not going to get those tip-top prices. You have to price ahead of the curve, okay? So that means that assuming that median sale price that has started to go down, it had a little pop up, right? But most likely probably going to start going back down. You want to be ahead of that curve so you don't get left in the dust, okay? If you have questions about what that means, give me a call, shoot me a text, DM, carrier pigeon, and I'll explain it. But you don't want to get left in the contingency of sellers who are still pricing as if it's 2021, honestly. So yeah, that's my thoughts. If you're a seller, I have tons more thoughts as well. Again, reach out. I'll share them with you. If I'm an investor, y'all know what to do. I'm getting the war chest ready. I'm stacking my gold. I'm stacking my coins. I'm getting ready, okay? And if you're a cash buyer, get ready to start flexing because this is the market that was made for you. Pretty soon, already, honestly, I'm starting to see listings that are just sitting forever and ever. And these agents aren't having the tough conversations with their sellers. So pretty soon, a lot of those sellers, they're going to be so desperate for a buyer that if you're a cash buyer, you're swinging on up into the joint with a, nice little cash offer. Like we said, 97% close price to list price ratio. So it's not like you're going to be getting 50% off, but, start to be aggressive, right? And make sure you're speaking with a professional like myself who knows what a proper aggressive offer in this market is, because you don't want to be too aggressive and burn bridges. So you need a professional to kind of feel things out, let you know, hey, look, in this neighborhood, things are going for about 96.5% close price to list price ratio. So, maybe we start off like 10%, whatever the case may be for that specific area, right? So those are my thoughts, guys. Let me know if you have any questions in the comments down below. Would love to hear from you guys. And like I said, if you need an expert realtor in the Miami area, I'm your guy. Who else would you call? You know what I'm saying? My contact info is in the description down below. And that's about it, guys. Jake Fletcher here with the Fletcher Group at eXp Realty, your Miami realtor. And until the next one, hope you guys keep on winning. And I'll see you then. Peace.